Okay, looking at a small stock dividend here, and we have our old friend ABC Company again. They have 13,000 shares of $1 par value common stock outstanding. They distribute a 5% stock dividend when the market value of the stock is $15 per share. What we want to do is journalize the declaration of the stock dividend on August 15th and the distribution of this dividend on August 31st. Okay, so we've got August 15th here. And what we've got to calculate is what is the amount of this stock dividend going to actually be. Well, we've got 13,000 shares, and we know this is a 5% stock dividend, so we're going to multiply it by 0.05, and the market value currently is $15, so we multiply by 15. So 13,000 times 5% is 650. So basically we're saying 650 times 15, which is 6,500 plus 3,250, 9,750. So we have here on 815 a stock dividend of 9,700, and we'll give a little more room here. $9,750. Now, what we've got to think about here, this is our debit side, we've got to think about the credit side. And essentially, one thing we know we're going to have is we created a form of a liability here. We have to give this stock to the current holders of stock. So basically we have, and this is common stock, so we're going to have a common stock, but now we have a dividend distributable. We can't put a payable here because this isn't cash. So we're distributing these shares. So essentially, when we think about this, well, how do we value this? This isn't valued at just our 97.50. What this is essentially valued at is our par value of these stocks multiplied by the number of shares outstanding by the percentage. So our par value is $1. We have 13,000 shares outstanding, and we're looking at a 5% stock dividend. So we're looking at $1 times 13,000 times 0.05, which means 650. So our common stock dividend distributable amounts to 650 here. And then to balance this, because we have a debit of 97.50 and a credit of 650, we have to put this into paid in capital for common stock, and the difference is the 97.50 minus 650, which is 9,100. Okay, this is the declaration of the stock dividend. Now when we pay it on 8/31, basically we have to, since this distributable is in effect our liability, if you will, we have to debit that because we're fulfilling that now. So common stock dividend distributable, and that's 650. And what we have to credit now is our common stock, because that's what we're giving out. So on a small stock dividend, this is how we calculate things here. We have, for the actual value of the stock dividend that we're giving out, it is the number of shares multiplied by the percentage of dividend multiplied by the market share. To get the dividend distributable, essentially we're taking the par value multiplied by the number of shares multiplied by the percentage. So this is a small stocks dividend. I'll be back again with more accounting related videos, but in the meantime, practice your accounting. Bye.